Are you looking to invest in the energy sector but don't know where to start? Look no further. In this video, I'm going to walk you through 10 stocks that I believe will do well in the long term and are a great place to start when investing in the energy sector. Don't forget to subscribe so you don't miss any future videos. Number 10. ENBRIDGE. Canadian oil and gas company ENBRIDGE Inc. operates in North America and Europe. Having gone public in 2009, the stock price has been on the rise since then. The dividend yield and growth potential of ENBRIDGE stock make it an attractive investment. Approximately 30% of North American crude oil is transported by this energy infrastructure company, as well as nearly 20% of U.S. natural gas consumption. Furthermore, it operates a large natural gas utility, which gives it some protection against oil price fluctuations. In the past 27 years, the company's dividend has grown at an average compound annual rate of 10% over the past 67 years. Number 9. CHENIERE Energy Inc. The CHENIERE Energy stock is a good stock to buy and hold because it has a long history and has been growing for a long time. As a dividend-paying stock, it is also a good investment. During the period since 2016, CHENIERE Energy's share price has increased by over 200%. A 1% dividend yield is also offered by the stock. CHENIERE Energy Inc. has 19 analysts offering 12-month price forecasts, with a median estimate of 165, a high estimate of 199, and a low estimate of 153. That represents a 22.87% increase over the last price of 134. As CHENIERE Energy stock continues its growth trajectory over time, it is expected to become one of the most popular stocks in the U.S. Number 8. EQT Corp. Despite short-term supply and demand considerations, the energy sector will be driven for decades by energy security and decarbonization, says Rob Thummel, portfolio manager at Tortoise. Analysts forecast EQT Corp's 12-month price at 54, with a high estimate of 82 and a low estimate of 40. Number 7. Chevron. A world leader in the energy industry, Chevron has been around for more than 100 years. Globally integrated oil and gas company with exploration and production assets, refining capabilities, and chemical capabilities. Energy sector volatility is weathered by the company's large-scale and integrated operations. The deal is expected to be worth more than $3.15 billion in 2022. Chevron will be able to increase its renewable fuels production capacity to 100,000 barrels per day by 2030 thanks to that deal. Chevron uses the cash flows generated from its legacy oil and gas operations to pay a growing dividend, repurchase shares, and invest in the future. Chevron increased its dividend for the 35th straight year in 2022, which means it more than qualifies as a dividend aristocrat. Number 6. Occidental Petroleum. The Occidental Petroleum Corporation is an American company engaged in hydrocarbon exploration and petrochemical manufacturing in the United States, Canada, and Chile. The oil industry has been dominated by Occidental Petroleum for more than 100 years. They are one of the world's largest producers of oil and gas. A forecast of the firm suggests generating average annual EPS growth of more than 10% over the next 3 to 5 years. Exploration, development, and production of oil and condensates, natural gas liquids, and natural gas are all part of the oil and gas segment. Chemicals and vinyl are manufactured and marketed by the chemical segment. Midstream and marketing purchases, markets, gathers, processes, transports, and stores oil, condensate, natural gas liquids, natural gas, carbon dioxide, and power. Number 5. DEVON Energy Corp. An independent energy company, DEVON Energy specializes in oil and gas exploration. Aside from development and production, the company is also involved in natural gas transportation and natural gas processing. In the fiscal first quarter of 2022, DEVON Energy Corporation generated revenues of $3.81 billion, beating market expectations by $242 million. Earnings per share were $1.88 and $0.12 above estimates. Increasingly, the public and policymakers are considering clean and renewable energy sources. Even so, DEVON's exploration initiatives are appealing because they focus directly down the middle of America, from Williston Basin to Eagle Ford. Number 4. Diamondback Energy, Inc. The company acquires, develops, explores, and exploits unconventional, onshore oil and natural gas reserves. Murphy Oil and Diamondback Energy are likely undervalued at the moment. It also stands out as one of the market's strongest value stocks when considering its earnings outlook. Number 3. Marathon Oil. Marathon Oil became an independent oil exploration and production company in 2011. In addition to its integrated gas business in Equatorial Guinea, the Houston-based company is focused on the top resource plays in the U.S. Marathon Oil Corporation may be undervalued based on valuation metrics. The company's value score of A indicates that value investors should consider it. MRO financial health and growth prospects demonstrate its potential to outperform the market. Number 2. Brookfield Renewable. Brookfield Renewable is one of the world's leading producers of renewable energy. The company operates hydroelectric, solar, wind, and energy transition assets. Power generated by these assets is sold to electric utilities and other large power users under long-term fixed-rate power purchase agreements. There is a large backlog of renewable energy development projects at the company. With acquisitions and higher power prices, Brookfield expects to grow its cash flow per share by as much as 20% annually through 2026, supporting a 5% to 9% yearly dividend growth, making Brookfield an excellent renewable energy investment. Number 1. CONOCOPHILLIPS. CONOCOPHILLIPS is a diversified oil and natural gas company. Several methods are used to produce oil and natural gas by the company, which has operations around the world. As a result of CONOCOPHILLIPS' low operating costs, it is expected to generate significant cash flow. According to the company, it will generate a cumulative $80 billion in free cash flow by 2031. The company anticipates returning almost all of the windfall to investors. CONOCOPHILLIPS is also expected to benefit from the current macroeconomic conditions, according to the analyst, who raised his price target from $150 to $157 while maintaining a buy rating. Lavadlio's price of $160 is near the highest price target on the street and implies a 43.6% upside from 0.6% to current levels. Thanks for watching. For more such interesting updates, please make sure to subscribe to the channel and hit the bell icon.